Spokane home prices have declined 12% since April 2022, but this could be the first time in history that actually doesn't matter. Now don't get me wrong, 12% is a big number and it sucks if you're stuck right in the middle of it trying to buy or sell a house, or maybe you bought your house in the last 12 months and have watched the prices go up and then fall right back down. And maybe what I'm about to say is a bad analogy, but the housing market is just going through a period where it's more like the stock market. Over the last 100 years, there's been over 25 bear markets, meaning stocks drop 20% or more over a short period of time. That means we see a 20% decrease in stocks every 4 to 5 years. Can you imagine if the housing market went through a decrease of 20% or more every 4 to 5 years? People would be panicked all the time, more than they currently are. Now you can have extreme drops like what we see in Bitcoin or Tesla stock, but even when the riskier investments go through a period of rapid increase and then fall off, many people still come out on top and make money. These people are the ones that have been in the game the longest, and that's what ties us back to the Spokane housing market. Over the last 2 years alone, prices have increased 28%, and in the last 5 years, they've increased 88%. So looking at a 12% decrease really doesn't affect the vast majority of homeowners in the Spokane area. I think we can agree that we are still pretty far from any type of significant housing crash, but we could potentially be getting closer, especially if that's what you're hoping for. Which makes me curious, what are you hoping will happen? Are you a homeowner that is hoping prices will continue to go up, but maybe not as extreme as they have in the last few years? Or are you a buyer that's hoping the market is going to crash so you can jump in? Let me know down in the comments. I would love to hear from you. So how do you plan for 2023 as a home buyer or seller? Interest rates look like they might have leveled out a little. Home prices have bounced back up in the last month, so what should you expect? That's what we're going to talk about so you can make an informed decision. To determine where the Spokane housing market might be going, let's take a look at what is happening today. Currently in the Spokane MLS, there are 1,123 homes available ready to accept an offer. That's an increase of over 400% from this time last year when we had 273 active listings available. Now that market was a totally different market when interest rates were literally half of what they are now. So to give ourselves a better idea of what normal is, the 3 years prior to COVID averaged 798 homes for sale. So our inventory is still up almost 70% from a normal market. It's nice to take a look at that time period and compare it to where we are today because it was a little more normalized. There weren't a ton of multiple offer situations, maybe a few here and there, but buyers weren't getting insane deals on properties every day either. Actually, the days on market and the month's supply of inventory were pretty similar to what they are today, but we'll dig into that a little later in the video. The thing to note about our current active inventory is that even though it is piling up, there are actually less sellers bringing their home to the market than there were this time last year, about 40% less. This is because at least a third, if not a half, of the homeowners in the United States have an interest rate of less than 3%. They're just hunkering down with their cheap money and making do with what they have because in order to make an upgrade in a house, their monthly payment would increase significantly. The other point to understand in regards to inventory is called month's supply of inventory. When you're trying to make an informed decision or just get to know the overall health of a real estate market, this is one of the best data points to look at because it's taking a direct look at the correlation between supply and demand. This is a great data point to look at what is happening right now because you can literally look day by day to see how many homes are accepting offers, how many homes are selling, which helps keep track of how many buyers are active in the market and how many sellers are stuck. This is the only data point in real estate that can really be calculated at this granular level without needing to zoom out and look at the market over a month-long period, such as having to calculate the average sold price. So as I'm filming this video, I'm looking up the current December data myself because it is still December and the Spokane MLS won't release the December numbers until January, but here's what I'm coming up with. The Spokane MLS shows that November 2022, we had 2.1 months supply of inventory, meaning if no homes came on the market, it would take 2.1 months for all of them to sell. Looking at what is sold in the last 30-day period, we are sitting at 2.7 months of inventory here in Spokane. We haven't seen a 3-month supply of inventory in Spokane since the middle of 2016, so hitting that number would be pretty significant. In comparison to last year, we had less than 2 weeks of inventory when things were crazy, but to show you how far off we are from a crash like we had in the last one, in December of 2009, there were 7.5 months of inventory. There were 500 homes sold with 3,500 homes sitting on the market. So I could end the video right here and say, guys, we've got a long way to go between 1,100 active listings and 3,500 active listings, but there's a lot more information for you to be a 2023 real estate rock star. Just remember that less than 3 months is still considered a seller's market and above 6 months is a buyer's market. So if you're feeling the pain in the market right now, then you better hope we don't see 6 months supply, because only 40 to 50% of homes actually sell in a market like that, which is not fun for anybody. And I know most of you are saying, all right, Hayden, we know you're an active real estate agent, and even though we'll give you a call when you're ready to buy or sell here in Spokane, you're only factoring in your knowledge as a local expert and not taking into account all of the national concerns like the recession or interest rates, which you're totally right. I have absolutely no idea what's going to happen, and nobody does. Not the president. Well, maybe the president does, but it sure doesn't seem like Jerome Powell does. We've gone through 4 rate hikes this year, but as of the Fed's last monetary policy meeting on December 14th, they showed us that they are slowing the rate of increase on interest rates. Now, Powell is very quick to say that he doesn't believe that we should be celebrating or that we're even close to where we need to be to get inflation down, but the fact that they didn't increase rates as much as we thought they did was really good news for mortgage rates. Mortgage rates aren't directly tied to the Federal Reserve interest rate, but they do react to what the Fed does and what they believe they will do in the future. So when there was even an ounce of good news that they increased the rate less than predicted, interest rates dropped and even fooled us into thinking we might see something in the 5% range for Christmas, but unfortunately that didn't happen. The best thing we can do in regards to interest rates is just be prepared for what could happen. And Nadia Evangelist, economist from the National Association of Realtors, breaks this down into 3 options. In scenario 1, inflation continues to remain high, forcing the Fed to raise interest rates repeatedly. That means mortgage rates will keep climbing, possibly near 8.5%. In scenario number 2, the consumer price index responds more to the Fed's rate hikes, and there's a gradual deceleration of inflation, causing mortgage rates to stabilize near 7% to 7.5% for 2023. In scenario number 3, the Fed raises rates repeatedly to curb inflation and the economy falls into a recession. This could cause rates to likely drop to 5%. So even if we get bad news and we hit a recession, your home buying power might actually increase as rates tend to drop once we've hit that. If that is a possibility and something you're looking forward to do, I would make sure that any money you plan on using for your home purchase is in a high yield savings account and not sitting in stocks. You'll want to make sure you have paid off as much, if not all of your debt, because credit card interest rates will continue to rise and you want to make your cash safe if you plan on using it within the next couple of years. And even though we are seeing a lot of articles about how 4 out of 5 economists believe we will be in a recession or there's a 70% chance of one, many people believe it will be mild and nothing that will change our lives long term. So we started this year with probably the toughest, I won't even say probably, like we did start 2022 in the toughest buyer's market Spokane has ever seen. Not enough inventory, way too many buyers, interest rates at an all-time low. It was basically guaranteed that you would be competing against 5 to 10 other buyers who wanted the home just as bad as you. I've been in situations where buyers were paying well over $100,000 above the asking price, which in Spokane is 20 to 25% of the purchase price. If you didn't have a year or 2 of your salary in the bank and ready to put it all into the house, it was going to be very tough for you to get your offer accepted. We saw a massive change in the real estate market with a rapid increase in interest rates that caused the affordability in Spokane to plummet, because people could afford a $2,000 a month payment on a $400,000 house when interest rates were low. But now that that same house has a payment of $3,600 or more per month, it's just out of the ballpark for anybody. So where we are today is a market where buyers and sellers are beginning to understand the new normal. Over the last couple months, it was very difficult in terms of communication and negotiation because sellers were stuck in 2021 and buyers were already in 2023 in terms of their mindset and how they wanted the transaction to go. We're starting to see a lot more understanding now. Buyers are coming in with an offer that they want, but realizing it's not a 2008 style housing reset that we're going through, and sellers are realizing that they will most likely have to give some concessions or make some repairs in order to get their home sold because they won't be receiving multiple offers anymore. With this, my best guess for 2023 and many economists at the National Association of Realtors, which is the best source for housing information, is that home prices will stay relatively flat. I think it's likely that we found the bottom of this price dip and nothing is being predicted that would cause prices to shoot up. Something drastic would have to happen either way that we just can't predict. If somehow interest rates fell into the 4s, I think we would start heading right back into the crazy market of 2021. But if they hit 8 or 10%, like some people are predicting in order to curb inflation, I think our market would just stall completely or hit what we call stagflation. No one would be buying or selling. We would have very few new listings and very few solds, meaning there would be very little activity in the market for both buyers and sellers. So why I bring all this up is because if you are someone who is sitting on the sidelines waiting for the perfect time to buy, I truly believe that right now is it. If interest rates go down, you can always refinance, and if they go up, you'll be happy about the one you're locked in. I'm currently running numbers on investment properties every day to see what I can find here in Spokane that will work, because there are a lot more aspects to real estate than just the price and the interest rate that can make something a good deal. My biggest advice is to just remain open-minded, get pre-approved, and be ready for when the right opportunity comes up, because before you know, you'll have missed the bottom of the market and continue to rent or not make a move that you've been dreaming about. If you've been considering selling in 2023, I don't think you need to feel rushed to do so. The market is very slow right now, and many buyers are discouraged by the lack of new inventory, so they aren't getting pre-approved and actively looking to buy. So it might benefit you to wait a little until the spring when more homes are hitting the market, because it'll pique the interest of more home buyers. And many of the homes listed for sale right now are going to expire and list in the spring as well. So it'll just kind of start something fresh, bring some new fresh inventory to the market and bring some new excitement. Plus, if you're looking to stay in the Spokane area, you'll have more options to pick from unless something really stands out to you that's listed today. What you should do is start prepping your home for sale now so that you can have an amazing listing when the time is right. Making your property stand out amongst all the rest is extremely important right now. So make a list of all the things that you need to do, whether it's painting, some minor updates, planning for landscaping in the spring. I'm happy to stop by for 5 to 10 minutes and give you some quick and honest feedback on what you need to do to maximize your value for as little money as possible. Because I promise you, it's not the kitchen or the bath remodel that you were thinking of doing. And if you are looking to make a move in or around Spokane, knowing the good, but especially the bad, is very important. So make sure to check out my top 10 things to know before you decide to live here. Head down to the link down below to schedule a call with me and subscribe for a new video every week. I'll see you in the next video.